sectors and specific stocks in today's trading session. But let's kick off the show with the company which we have on board. Aether Industries has been in focus in the past couple of trading sessions as it's entered into an agreement with Saudi Aramco Technologies for its converge polyols product series. What is the revenue potential? What does this particular deal mean? And to tell us the outlook for the business as well going ahead, we have Aman Desai, who's the founder and director at Aether Industries, joining in this morning. Aman, hi. Thank you very much for taking the time out. If you could just simply start by telling us about the tie-up that you have with Saudi Aramco Technologies. What would it mean in terms of a tie-up, one, and two, the revenue potential, and when does it kick in?
Hi, Ekta. Good morning. Thank you for having me on the show. We're very excited to announce the signed letter of agreement with Saudi Aramco, and we have been talking about this for the last couple of years, and we did our IPO last year, and they were in fact one of the customers that had given us consent to publish their name as our customer. And so we have been working with them on the development and the upscaling of the commercialization technology and process to manufacture these converge polyols. These are very interesting and exciting polyols, which are potentially very sustainable polyols containing up to 40% carbon dioxide by weight, which we're targeting in the case industry, so the coatings, adhesives, sealants, and elastomers industry. And so as the next milestone of the collaboration that we have had with Saudi Aramco over the last few years in developing this technology is this important milestone that we just signed the letter of intent for, which is the finalization of the licensing agreement, which allows us to keep on manufacturing this polyols in the future. And we have defined the next set of milestones, which includes a potential commercial launch with another partner in the case industry, where we will be incorporating this technology as the process to manufacture the polyols, which will be used in this new product launch by this another partner that we will announce in due course.
Hi, Aman. Good morning. Thanks so much for joining in. So you're saying this letter of intent with Saudi Aramco Technologies that you have signed, that's as good as finalization of an agreement, or do we need to wait for the finalization of agreement date?
Nigel, good morning. Nice to see you again. It is as good as finalized.
Okay.
So the letter of intent basically summarizes the intent, and the agreement is finalized, which will be inked in a month's time. So it is as good as finalized.
Okay, clear that then in terms of finalization of the deal. What is the revenue potential, though, you could get basis this letter of intent, finalization agreement, maybe in year one, and how does it scale up in the coming years?
Yeah, thanks, Nigel. It's a good question. I was expecting this question. Unfortunately, I cannot answer that question because, large multinationals, the confidentiality is key. We are going to announce the product launch with this yet another partner. So it's going to be a three-party joint press release that will happen in a couple of months' time now with a production launch. And this is obviously, if you know anything about the case industry, coatings, adhesives, sealants, and elastomers, it's a 11 billion kilogram industry, 11,000 KTA, out of which we are targeting 1,001 billion kilogram or 1,000 KTA target of differentiated and performance polyols, and these will be sustainable in nature. And so the market potential is significant. We need to wait and watch and see how it works out, but we are very excited and looking forward.
Analysts are estimating around 200 crores in terms of a revenue potential from this deal, possibly peak sales annually. I know you can't give exact numbers, but is that a fair assumption?
Ekta, I truly cannot. I don't know how that analysts, that number was fixed by the analysts.
Okay.
But,
all right.
Let's live TV.
Let's talk about the earlier long-term supply and sales agreement that you had signed in the month of March, which was with Otsuka Chemical, the Japanese company. Can you tell us where things stand in terms of execution of that particular agreement and the revenue potential there?
Yeah, so I think the revenue potential was mentioned in the LoI that we did was about 50 plus crores per year over those two products in an exclusive manner with Otsuka Chemical in Japan. And as you are displaying on the board right now, I see that we also signed a deal with Polaroid Life Sciences, where we were the exclusive research and development and scale-up partner for them in the film photography area as well as the life sciences area of Polaroid. And so over the last 3-4 months, we've done Polaroid, we've done Otsuka, and now we've done Saudi Aramco. And this is what we've been promising for the last 6-7 months, is that we are a differentiated company participating with and partnering with the global innovators across the industry spectrum, pharma, agro, material science, oil and gas. And I think the statements that we are announcing publicly kind of lend good credibility, I think, to those statements that we've been making all along. And it's a very exciting area.
So Otsuka is 51 crores. And from Polaroid, the potential was what, 120, 130 crores? With an upside potential 15, as well.
Yeah, so it was about 100 plus crores. And that was only taking into account the film photography. The life sciences component was not accounted for in the upside potential that we had demonstrated because it's still unclear. But we are very exciting things already being accomplished in the life sciences area with Polaroid. And we will, in due course of time, hopefully announce the upside potential of that area as well.
Aman, obviously, it's quite obvious that you all are focusing a lot on these tie-ups. There have been 3 just in the past couple of months. What is the overall strategy of the company when it comes to these global tie-ups, and what more can we expect?
It's a very interesting question. We are positioning our company as a differentiated partner for contract research and manufacturing services and the CRAMS business model, where we're partnering with the innovators in their pipeline and going all the way towards commercialization. And so it's a very interesting area. This is the 3 that we have announced. You could imagine we have almost 20 in the pipeline that we are along the same area, along the same lines that we are working on actively in a very advanced manner. So what to expect in the future, I think for sure we should expect additional announcements of this kinds with additional global innovator multinational companies in the industry sector that we are participating in. And so yeah, we should expect more of these in the near future, and we're actively working towards them.
All right, Aman, final question before we let you go. Then, what's it's new fiscal, right? So we're kickstarting the new fiscal. We don't want to know anything about FY23 any longer. Once you report your numbers, we'll quiz you on that. But for FY24, what kind of a revenue growth you're looking at, given the kind of tie-ups that you've done? And margins, I think normally you were guiding for the late 20s, right? Give us a broad guidance for FY24.
Well, the EBITDAs has been 29-30% historically, and that is the guideline that we have always given. The profits have been 20% thereabouts, and that's the guideline that we have always given, and that's the kind of guideline we continue to give. We will look at increasing this in a reasonable fashion. In terms of the new fiscal year, we have the new manufacturing facility starting up, already started, and we'll have contributions from that. We have these tie-ups that we are getting into with these various innovator companies across the industry spectrum. So definitely looking at good positive growth in the current, in the upcoming quarters and the
quantify that,
year for sure.
Try to quantify that, right? New manufacturing facility, more tie-ups. What's the rough number we should be looking at?
Nigel, thanks. I would love to, but I don't think I should. Mid-teens,
20%. You've got big capacity coming on. I guess it'll be more than that.
It's a fantastic morning, Nigel. Thank you very much for having me. I'm sorry, I'll refrain from giving some numbers.
We let you go this time, Aman. We let you go this time. But when you join us for your Q4 numbers, maybe you'll give us a better insight. For the time being, we'll take those margins at around 29 to 30% EBITDA margins that you'll have been doing. And you're looking to maintain that and probably work on that. Good speaking to you. Thanks so much for joining in and speaking to us on this particular tie-up.